Alright guys, welcome back to day 5 of my study arc. Today we are diving into one of the most powerful, most hyped and misunderstood, sometimes magical looking tools in technical analysis. It's called the Fibonacci Retracement Tool. Now listen, like I've done my own research and like I have modified it a bit. So I will explain it into detail later. So let's break it down in the simplest way possible. So the Fibonacci retracement tool is just a technical analysis tool, which a drawing tool that helps traders identify support levels and resistance levels. In other words, it shows you where the market's going to pull back before continuing in the same direction. Now I customize my Fibonacci retracement tool because, like I told you guys earlier, I did my own research and this actually works for me. I have made a lot of money because of this, and I'm gonna share the whole modifications with you, and I'm gonna show you how to use the Fib tool as well. Okay, so this is the Fibonacci retracement tool, and as you guys can see, there are few levels from 0 to 2.272. Before all that, I will give you guys the modification I've done for the Fibonacci tool. So there you go, these are the first modifications. I'll just leave it there for some time for you guys to actually note it down, and then these are the rest. Just go ahead and click OK, because I put my 100% trust on this tool, and it has worked so far. And then I will show you guys what these are. So these are, like I told you guys earlier, all of these from the basic the purpose of Fibonacci retracement is to identify support levels and resistance levels. So each of these levels can be considered as resistance levels. So I have drawn it as an uptrend, finding an uptrend. It's anyway, it's going up. So from 0 to 1, and the last one will be 2.272. So anything in between all these are resistance levels. Basically, when you are using the Fibonacci tool, there are two scenarios. The first scenario would be if the actual market is in an uptrend, and I mean, uptrend means that it's actually making high highs and high lows. uh, After some point, if the market makes lower lows and lower highs, we could use the Fibonacci tool and see where the downtrend's gonna go to its maximum level. And then the second scenario would be if the market is actually in a downtrend, and it starts making high highs and high lows, we could actually see how long will the uptrend would continue before going in a downtrend. So basically, those are the two scenarios we could use Fibonacci retracement tool for. And I will show you guys a sketch beforehand, and then we'll go to the live examples. And just like I told you guys earlier, Fibonacci retracement tool can actually identify two scenarios. We can identify an uptrend, and then when we can identify a downtrend. So basically, when we talk about an uptrend, the uptrend's gonna make a pattern just like I mean, it's originally it has to be a downtrend, and then it's gonna be like this, a downtrend, and then it shifts to a uptrend making high highs and high lows. Then what we can do using Fibonacci level would be, we could identify where it's gonna go next. I mean, how long the uptrend's gonna last. And when we talk about the downtrend, it originally has to be in an uptrend. So basically, it's gonna be making high highs and high lows, and when it gives us the uh, confirmation of a downtrend, we could use the Fibonacci levels, and then we could see how long the downtrend's gonna last. So this is the normal idea. Don't worry, I will tell you guys how it's gonna work. Okay, so first of all, we'll talk about the uptrend scenario. So basically, the market is actually initially it has to be in a downtrend, and from this level, this key level, it starts to change. It starts to make high highs and high lows. So basically, it gives a indicator that it starts in an uptrend. So it starts to go up, and we actually do not have any idea how long this uptrend is going to last. So that's why the Fibonacci retracement tool comes in handy. So what we have to do is, as you guys saw earlier, there are few levels, key levels in the Fibonacci retracement tool. There are two main levels. It's called the zero level and the level number one. So right now, that's what we are going to use. I'll show you guys it properly. Okay, so we'll just get rid of these two for now. Okay, so as you guys can see, this is the number one level, and this is the zero level. These two are the crucial levels we need when we are trying to find an uptrend or a downtrend. And let me draw it for you guys. So when it's coming in a downtrend and it starts to give a high highs and high lows, showing that it has turned into an uptrend, what we have to do is we have to use this zero level to the lowest point of that trend, and we have to use the number one, this level, to the nearest previous high. So right now the previous nearest high is this. So right here we have to put the number one level. Okay, I'll just show you guys with the actual tool. So like I said before, we have to use the zero level here and the number one level here, and that's how you identify how long it's gonna how long the uptrend's gonna stay valid, like it's gonna go up for. And after that, we have to talk about the downtrend scenario. And as you guys can see, this is initially for us to find the downtrend scenario, we need to be the market actually needs to be in an uptrend. And just like that, this is in an uptrend, and then from here itself, from this crucial point, it has shifted to a downtrend. And like I told you guys earlier, we need to use the Fibonacci retracement tool to the next the previous nearest low or high. So we have to get the Fibonacci level, the tool, and the zero level would be coming over here, and then we have to use the previous. Now as this is an uptrend, we have to use the previous low. That's how we are gonna use the Fibonacci retracement tool in order to identify about this. Like I have to get a deeper meaning, like deeper understanding about this downtrend. So like how long it's gonna stay valid, how long it's gonna go down for, like all that. Okay, then so I have taught you guys how to draw the Fibonacci tool, use the tool, like how to use the tool. Then I will show you guys how to actually read the tool, like how to identify, like how to get a understanding about the crucial points and crucial levels. Like I told you earlier, from this Fibonacci retracement tool, we can identify all the resistance levels and the support levels. So now I will show you guys how to read them. So for an example, I will show you guys the uptrend. Okay, so let's see that let's say that it was initially in an uptrend and now it has gone down, and then what we need to read is the uptrend scenario. Okay, so like we don't know how long it's going to continue the uptrend for, so that's why we're going to use the Fibonacci tool. Like I said earlier, if you are trying to find the uptrend scenario, you have to go to the zero level, the lowest point of the downtrend, and then you have to draw the drag the number one level to its nearest previous high, and that would be here. So as you guys can see, there are these levels, 0.236 and all these levels. And let me drag it out. Okay, now all these levels are resistance and support levels. Like you can consider these from any given point, from this point, from this point, from this point, the market could just dump. It could just dump from here. But here's the interesting part. If the market keeps on coming up and it breaks this number one level and it makes a closed candle, it's definitely gonna go up to this blue line. That's why I told you that it's actually important. This is an important information regarding the Fib tool. Like I said earlier, if by any chance the market actually keeps on making closed candles above the number one line, this level, and it makes a closed candle over here, it's definitely gonna go up. Like I said, I mean, it's it's not gonna be definitely gonna go up to this the blue line. There is a 90% probability that it's gonna go up to this blue line. Okay, that only happens, this line would be broken by the market only if it keeps on making closed candles above the number one line. So this is when you try to identify an uptrend. This happens only if you are trying to identify an uptrend using the Fibonacci retracement tool. Okay, and let's say it keeps on making closed candles above this blue line, there is a slight possibility that it's going to go in between this zone. All right, in this zone, the zone is 2.272, but this level might be broken just by a wick, just like this. Let's drag it out. So this is the level. It can be broken by a wick, just like this, or else the market can actually be in a consolidation phase in this level before it just goes down. It goes down. Okay, and now I've covered the uptrend scenario. Let's go to the downtrend scenario. Well, okay, so this is the downtrend scenario. The market was actually going in a downtrend. It was sorry, it was initially it was going in an uptrend. It was going in a uptrend, and then it started making lower lows and lower highs, and it's actually going down. So right now we need to identify how long this downtrends gonna continue. Like I told you guys earlier, we are gonna put the zero level of the Fibonacci tool to this, the top of the trend, to this high, and we're gonna drag the number one level to the next previous, sorry, the previous low. And now we get a slight understanding of this downtrend. So like I told you guys earlier, if this downtrend continues, making closed candles below this number one level, there is a 90% chance that it's gonna go up to this blue level. If not, like I forgot to tell you guys earlier, let's say if it does not break the number one level, there is a chance that the market can actually reverse from one of these levels, one of these levels. So you have to wait patiently in order for it to make a closed candle above this below this number one level if you're trying to find a downtrend. And you could go for a long from here, or else you could go for a short from here. That's all. It's all up to you. So like I told you guys earlier, there is a chance that the market can actually turn into an uptrend from over here, or else it could be in a consolidation phase from here and then reverse, or else it can actually hunt this 2.272 level with a wick and then turn its direction. I mean, there are scenarios that it keeps on just going down, and if you're finding in the uptrend also, there are scenarios that it's gonna just keep on going up. So I'll show you guys a scenario like that after. So this is the basic idea of if you're finding a downtrend. So just note it down, get it in your head. And okay, so let's go to the live charts for me to show you guys a downtrend scenario and an uptrend scenario. Okay, so I will give you guys an example in the live trade. This coin is Solana. So as you guys can see in this right over here, the market was eventually I mean, at first the market was in an uptrend, and then as you guys actually can see, it has turned into a downtrend. So right here, this is the actual lowest point of that downtrend, and it has shifted to a uptrend and it has gone up. Okay, so it has basically gone up. And let me show you guys how to use the Fibonacci level. If you were actually at this point, all what you have to do is go to, like I told you guys, the lowest point would be the zero level. The zero level would be somewhere over here, this level, and then we have to go to the highest level of that point, of that trend, downtrend. So right now this is the previous high. So this is the previous high, and this is the lowest point. So there you go, the zero level is going to be on the lowest point, and the number one level, this one level, is going to stay on this high, previous high. And then let's see, do you see how well it reacted to these levels, this blue line? And like I told you guys earlier, it might be in a consolidation phase in this level before it going down. Just like I said before, it's respected these levels and then it just went down. Just look how much it went down. It just went down for 67.67%. That's a lot of money. So that's a good example for the uptrend. So basically we identified this move, and yeah, let me show you guys an example for the downtrend. So we'll try to find this downtrend, and like I told you guys earlier, this was initially going as an uptrend, and then it gave the confirmation for a downtrend right over here. So let's see if the Fibonacci retracement tool works perfectly for us to identify how long this gonna go. So let's take the tool, and as you guys can see, this is the highest point of the trend, and this is the lowest point of the trend. So basically it almost came to the blue line. Sometimes these kind of scenarios happen. I want to tell you guys earlier, sometimes these kind of scenarios can happen. It comes almost towards the blue point and it just changes its route and just goes on its way. Rarely this happens, but it is possible. Always keep that in mind. We were right over here. We'll go further back, and as you guys can see, there is a downtrend somewhere over here, and it was initially in an uptrend. Let's see whether the Fibonacci retracement tools are actually working or not. So as you guys can see, this is initially, it was this and then it went down. So let's use the tool. This basically, if you are in a downtrend, you are going to use the zero level to the highest point of that trend. So right now this is the highest point, so zero level is there, and we are going to use the number one level to its previous low. So right now the low is here, and then let's see, this is the blue level, this is the blue level. Yeah, like I told you guys, it just stayed in between these two key levels in a consolidation level phase, and then it just went up. So this is a clear example for the downtrend scenario. It respected these key levels. So always keep in mind, this is a good tool. This is a good technical analysis tool. So that's basically what Fibonacci retracement tool is, how I use it and how I customized it, and how I basically see it. So some traders will use different modifications for this tool, and like, but with mine, no harm was done to the whole Fibonacci concept. At the end of the day, it's not about just drawing pretty lines, it's about combining this with actual other confluences such as market structure, candlestick patterns, liquidity, and support and resistance. So yeah, that's all for today. That's all for today's study arc. and day 5 is basically complete. Tomorrow we'll get even deeper, and we'll teach you some important stuff. And thanks for watching, and always remember, respect the wicks, respect the golden ratio, and don't let the market play you.